Bitcoin is currently trying to break over the 25,200 major resistance. Is this the breakout we have been waiting for, or will it result in another rejection? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning into another video. I hope you're all having a fantastic day today. We're here to discuss Bitcoin's price action in regards to the current short-term and macro, specifically focusing on the daily candle pushing above that 25,200 to 24,400 major trigger and resistance zone. If you recall, this resistance zone is a major bullish trigger, which suggests that a break above will result in a macro uptrend developing. And we can support those claims through not only this horizontal chart, but of course through our macro chart, as the 25.2K level will reflect the point of which Bitcoin will cross over the 200 moving average on the weekly, resulting in a trend shift upwards, as well as a close over the 50 EMA on the monthly, again resulting in a trend flip upwards. We'll come back and discuss those points in a second. Now, before we get into it, smash the like button, hit the comment button, subscribe to the channel. We do daily videos for Bitcoin. We focus on the charts, the technicals, the data, the economic data, the traditional markets, market data, and so much more. In today's video, we'll be covering everything from traditional markets to short-term price action and technical analysis. You can find us on Telegram as well. That will be the second link down below. You've got access to our Telegram channel. Now, really quickly, guys, make sure you only join the Telegram channel via the link in YouTube. There are a few scam channels out there impersonating me. Make sure you are in the correct one. You can find charts, you can find videos, posts, polls, updates, educational posts, news events, so much more in this channel. If you are interested in our VIP trading channel, you can get access to specific entries, targets, and stop losses for altcoin and Bitcoin signals. You'll get access to two channels, our main trading channel, and of course, the VIP group chat. Over 533 members in there currently. You can go ahead and get access to all of that. Go ahead and contact me now. Let's get into the video, you guys. We'll start off with the market data. So, currently for the month, Bitcoin is up 10.73%. I posted a poll in that channel on Telegram yesterday asking you guys what you think the monthly candle will close, and we had a pretty split decision between green and red, about 344 votes, very much on the fence. We have a very slight leaning towards that green candle close as opposed to the red candle close. So it looks like as a majority, the market is still kind of on the fence in this indecision phase, which is, again, as expected, whilst Bitcoin remains at resistance within a massive indecision phase. Remember, this area between our major trigger, our bullish trigger, and our major bearish trigger is very much a decision phase for the market. It's deciding where it's going to go next, whether or not it's going to break this resistance and result in a bullish trigger and continuation, or break our lower support and continue into a extended bear market. So we've got a few different options here, and again, the data is reflecting a lot of indecision. And again, just by looking at public opinion, what people are saying, there are still very split decisions and a lot of indecisiveness between the bull case and the bear case. But we'll break it down today, so no worries about that. Looking at volatility, 3.13% on the 30, and for the 60, we're at 2.96, again, both of which are on the climb. As we can see, liquidations are down 46% to around 113 million, and volume is down 22%, sitting at 108 billion for the 24-hour period. And within the last 24 hours, we have seen a pretty decent spread once more of longs and shorts being liquidated. Again, this is quite standard as we approach resistances. We generally see people try front run moves and people trying to short resistance. If we do get fluctuations up and down between those resistances, we can see a lot of chop occur in the market, which is very much represented by the liquidation data we are seeing here. There is no clear one side is getting wrecked. We're starting to see a little bit of liquidations occur on both the longs and the shorts. The DXY is showing a rejection from 105 over here on the chart. We can see a rejection candle at that level, a retracement back towards the downside, losing the current local lows. The DXY is temporarily at support over here. going ahead and suggesting that Bitcoin could potentially still see a rejection. A loss of this low at 103.5 will confirm the drop on the DXY towards the downside, and that could push asset prices much higher, a key level we're looking for over the next week. Looking at the Dow Jones and S&P 500, Dow Jones has bounced quite strong with a bullish engulfing candle on the daily chart at our 32,000 support level. A continuation upwards could potentially take us as high as 33,000. S&P 500 once more has bounced from this support level, again a nice strong bullish divergence candle, but unfortunately testing 4,000 as a 50 EMA resistance on the daily and a horizontal resistance. Again guys, if we reject from here, Bitcoin is likely to come down as well. Looking at where the S&P 500 is now right now at resistance, going ahead and talking about Bitcoin later in the video, you'll see Bitcoin is also at resistance. These 2 points can be used in conjunction with another to suggest a potential pullback is incoming. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that guys, Bitget is a non-KYC exchange, meaning you do not have to KYC, it is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Let's go ahead and get into the chart guys. So we'll start on the higher time frame, then break it down to the daily, the 3-day, the week, the 4-hour, the 30-minute, etc., etc. Okay, let's start on the higher time frame. So currently what we're seeing on this chart here, the weekly, we're seeing Bitcoin retest the 200 moving average. Now we have 2 days and 22 hours until we get this weekly candle close, and we've said it a few times already. We're looking for a weekly candle close above the 200 moving average, and the 200 moving average is sitting just over 25,200. 25,200 being the upper resistance of this current resistance range. When we're looking at resistances, particularly horizontal resistances and higher time frame moving averages, we want equal or just less than higher time frame closes above to confirm. Meaning, with a resistance such as this would span its 278 days, which is a monthly resistance. If it was greater than 365, it would be a yearly resistance. If it was less than 30, it'd be a daily resistance. Okay, it is currently a monthly resistance. We're looking for a weekly close above a monthly resistance for higher time frame confirmation of a breakout. Currently, for that weekly close, we got 2 days and 22 hours. For the daily close, we have 21 hours and 4 minutes, okay? So a daily close above this resistance, although it is a bullish sign, it is not going to be higher time frame confirmation of a breakout. We do need that weekly. And that is why we've been saying, guys, until we close a weekly above the 200, we don't really have that confirmation that that 200 has been broken yet. These wicks don't mean anything. Never make a decision on a wick. Looking at that 200 sitting there, again, breaking over the 200 will, based on overall market structure and moving average data, when we break over the 200 and close above the 200, it generally represents a shift from a macro downtrend or macro weakness into higher time frame strength. The greater distance between the price and the moving average represents overall strength of the price action, meaning as we approach a larger gap between the moving average and the price, it represents higher volatility, higher momentum, and greater trend strength. As we come closer and closer towards it, is representing weakening volatility, or more or less weakening strength in the current trend. As we break below it and push below it, again, it represents that same thing, but for the bearish scenario. And as we push towards it, it represents the same thing for the weakening bearish scenario. So in this instance, we're having weakening bearish strength. If we cross over, we now have a positive trend. And if we push well beyond that 200, again, such as something like this, where we're pushing away from 200, we have increasing strength on the higher time frame in regards to the overall trend. But the trend itself, according to a 200 moving average, will flip once we have a weekly close above the 200. Looking at the Gaussian channel, guys, usually when we push into the Gaussian channel and close within the Gaussian channel, we generally push through the Gaussian channel. We've seen a scenario here where we push into it, we close above it, we generally push through it, and we could potentially be seeing another scenario here. If we close within it, we could potentially be pushing through it. Again, that adds to the reality that we could potentially be seeing a move toward the upside coming. Looking at the monthly chart, a similar scenario occurring with the 50 EMA. The 50 EMA being a smaller time frame moving average. It is kind of a mid time frame moving average. It's not really a short moving average. It's not really a long moving average. It's a 50. It's kind of sitting in between. So it generally represents trend shifts a little bit sooner than what we would see on a lagging, like such as a 200, 150, 100, but a little bit later than such as a 20, 21, or even a 30. Okay, so the 50 is kind of somewhere between. Generally, when we see a monthly candle close above the 50 on the monthly chart, we never ever close a monthly candle back below the 50 on the monthly chart. We are going to be looking for that same scenario occurring here. 14 days and 22 hours for a monthly candle closed above the 50 will represent a overall shift in the trend, and again, higher time frame confirmation that the uptrend will continue. Looking at the range over here, specifically in regards to our horizontal range, the only two key levels we're going to be focusing on right now are these two levels here. If we zoom out, these are our main support and resistance levels immediately above us. If we're looking at the chart, guys, we have major indecision, we have our bearish trigger / major support, we have our bullish trigger / major resistance, and we have our bull market trigger / major resistance. The reason this here is called a bull market trigger is because every single time, guys, we close above that level, we end up moving into a bull market. I'm going to show you an example over here, guys. Let's go to this chart here. We can see that $30,000 level actually lines up with the yearly low of the prior bull run. This being the prior bull run. Every single time we close a monthly candle above the yearly low of the prior bull run, we end up developing a macro uptrend that spans into a bull run. You can see here, every single time we close a monthly candle above the yearly low of the prior bull run, we end up developing a macro uptrend, which eventually turns into a bull run. Again, you can see it over here, macro uptrend, and again, that resistance is going to be sitting at 30,000. Therefore, this resistance here, this upper resistance, I'm going to draw an arrow to it, is going to be the major trigger and major ejection point, which will facilitate a bull run developing or a massive rejection. Thus, breaking a weekly candle close above the 277-day long resistance will facilitate a continuation to retest our next major resistance between 28 and 30,000. Looking at the VRPV here, guys, we can see a huge gap in the VRPV immediately after 25,200. You can see it right over here, which takes us up to that 28 to 30,000 range, where we enter a whole new chunk of resistance, indicating a low resistance range between these 2 points, suggesting if we had positive momentum through this range, we could potentially see a lot of volatility pick up and the price move quite fast throughout this gap in the market between 25.2 and 28. Again, a lot rests on this current weekly close and for a monthly close for Bitcoin on the monthly chart. Let's go ahead and do a quick technical analysis, guys, and then we'll get into our short-term structural analysis and higher time frame structural analysis. So what we're seeing here, guys, on the higher time frames, we do have the price breaking above, but however, we do have a possible bearish divergence printing. And I don't want to be the guy who says, oh, we're bearish the whole way up. We're definitely not bearish the whole way up. It's looking quite good here, but it is something to keep your eyes on, this potential bearish divergence printing here. Again, if we do break through this resistance level on RSI, it could give us a surge in volatility we need to push higher, but it's definitely something to consider. As we have decreasing momentum, increasing price, it can sometimes result in fake outs. And if we've learned anything, guys, from higher time frame levels, we generally reverse via liquidation wicks or liquidity spikes over resistances or under support. So looking at this daily candle for a prime example, if this daily candle ends up being a rejection candle, there's a pretty high chance we're going to be continuing back down quite strongly. However, if this daily candle closes above and we do get that weekly candle close above, that will be pretty good confirmation, in fact, that we are going to be remaining above this level, and this level has now developed as a support. We are currently in the phase of turning this resistance into a potential support, but it has not quite been done yet, and thus it should be considered right now a breakout attempt, not a breakout. Okay, let's go ahead and dive into a slightly smaller time frame and discuss the next levels on the way down. Again, on the way up, guys, we really don't have much resistance. I do expect if we do start continuing, it will be a smooth sail all the way up to 28k, so we're not going to talk too much about that. On the way down, guys, for the next move to continue toward the downside, we're looking for similar confirmation as we had in yesterday's video. Ideally, a loss of 24,000 is going to be the trigger, as this represents the local low of the current range we have been developing within this breakout attempt. A loss of this level on the hourly chart, so hourly candle close, will give enough confirmation that we will see a pullback occur, and the pullback can take us as low as 22,597/22,600 within this range. We do have temporary support sitting right over here, guys, between that 23,500 to 23,300 level, again, which represents this local high right over here. But other than that, if we do start falling below this level here, we can see a strong continuation and pullback toward this level. If that does occur, inevitably we will fail the weekly close and fail the daily close above this resistance level, confirming a rejection from this point. Those are going to be our lower targets. If we do push towards this level and lose this level, our lower targets from there are going to be represented by our prior lows and the prior lower targets we have had before that point. Again, some of the key levels we're looking at are going to be 21,500, guys, which again was the low of this range, to 22,000. This is that level over here. Below that, we're looking for the next level, so 20,000, okay, to 20,500, okay, and below that, obviously 19,200 to 18,000. Every single one of these levels are going to be major supports and possible bounce points. Moving on to smaller time frame, guys, let's take a look at what the price is doing over here. I'm going to go ahead and delete everything we can see. We have pushed up a decent amount. We have come up, and it looks like we have found temporary resistance at around close to around 26,000. 26,000 being a major point of resistance on the chart, a point of resistance on the chart that we do need to break above on a smaller time frame to see a continuation in this price. I would expect 26,000 to be acting as a resistance, as it is a psychological level. We have our current uptrending support level developing on the chart on a smaller time frame. We go ahead and input our horizontal support below that, which is right over here. If we do lose this uptrending support, guys, we can expect a breakdown to retest the 24,000 level. If we do retest the 24,000 level after printing a lower high, I do expect that continuation toward the downside to resume. I do not think if we retest 24,000 again, we are going to bounce. There's a very high chance if we do retest it, we will be continuing down. So if you're looking for shorts, we're looking for shorts at that point, or you can take a very high risk short at this level here with stop losses sitting above 26,000. Consider very high risk, as you are prone to continuations upwards and you are prone to fake outs towards upside or liquidation wicks. So be very careful of that. Let's go ahead and do our technical analysis, guys, next on the hourly, and then break it towards upside. So hourly chart, again, we did find a temporary amount of support on the 50 MA. It did look like as we were breaking below that at one point, but we failed to break below. We actually remained around that point before breaking back towards upside. Again, like I said already, it looks like we have printed a slightly lower high, rejecting from the same hourly horizontal resistance or horizontal high, hourly high that we had back on the 15th, so 2 days ago at 25,890. Again, a break over this level will be confirmation of a continuation upwards. Again, where we can either print a bearish divergence and continue downwards, or facilitate a continuation upwards if we get that weekly candle close. Looking at the short term, like we said, we have the uptrending trend line over here. A loss of a level will retest 24,000. Upon that point, we will have lost the 50 EMA on the hourly chart. Again, trend flipping this toward the downside. We will have that downward strength and downwards momentum to follow the price toward the downside. Let's go ahead and do a momentum analysis really quickly. RSI, MACD, and market cipher B on the smaller time frames. Let's go ahead and get rid of this one for now. Market cipher B. Okay, so What we're seeing here on hourly, we can see momentum has definitely spun towards the upside. We have positive momentum over here on the MACD. We have positive momentum here on the market side B, and obviously we have an uptrend here on the RSI of momentum. That uptrend of momentum in the RSI, again, is represented by this uptrending in price. Therefore, a loss of this momentum line, this uptrending momentum line, can shift toward the downside, resulting in a red dot printing on the market side B, suggesting weakening positive momentum. And of course, the MACD will print a similar weakening positive momentum candle, a light green candle, suggesting a continuation downwards. Until then, the trend is very much still upwards, and we should only be considering continuations above 25,900/26,000. Moving to a slightly smaller time frame first, we can see in the 30-minute chart, we do have this RSI pushing very high. We can see that already we are starting to see glimmers of weakness here on the MACD with two light green volume candles printing, suggesting momentum is starting to weaken on the 30-minute chart. On the 15-minute chart, guys, we can see that has been exacerbated by the fact that we have now printed a red dot. However, guys, if we do push past that resistance, these indicators will cease to be relevant. We'll be continuing up on the higher time frame. Going to a 4-hour chart, guys, we can see on the 4-hour looking pretty good over here. We can see the MACD has kind of reset. We had this negative momentum a little bit over here. We had decreasing momentum, weakening momentum. We had negative momentum, and now we're starting to push and fade back toward the upside. We haven't quite got positive momentum yet. Again, we are still technically in the red, so we do still have strengthening negative momentum, which could potentially flip to positive momentum, which would occur above this resistance level if it does happen. Again, this is something we are watching, as it does suggest that this current move can still be considered a possible rejection / exhaustion move, which could result in a pullback. Until we get positive momentum of this move, it is likely this point could still be resistance and could get rejected from. Going to a higher time frame, guys, on the 12-hour chart, we can see that we did print a nice strong green momentum candle on the MACD, suggesting again momentum was weakening temporarily and has pushed back into the positive. RSI is still very much overbought over here, but again can remain overbought for an extended period of time, and our market side B on the 12-hour is pushing positive. On the daily chart, we can see a similar pattern occurring here. The market side B is suggesting weakening bearish momentum. We do have positive momentum on the MACD, and of course we have positive momentum in the RSI, but a potential divergence developing. So we have pretty mixed signals, guys, here on the higher time frames. The smaller time frames are suggesting we are coming close to resistance here. That is a resistance we should keep our eyes on. If we break upwards here, we can expect a continuation higher, but we're definitely waiting for that daily and weekly candle close to occur before we expect anything to really develop on those higher time frames. We're really quickly, guys, on the 3-day chart, we can see we had that break below the 50, a nice strong warning of a trend reversal. Then we had that economic news that the Feds were going to bail out and print some more money. That resulted in the price continuing towards the upside. We can see in the 3-day chart, we have actually printed a green candle here, guys, on the MACD, suggesting positive momentum has flooded in, similar to what we have seen on the market side B. And on the weekly chart, one more chart over here, the weekly chart, the 7-day chart, we can see a very similar thing. We have actually broken over the 50 EMA on the weekly chart, but again, we had seen a similar thing occur all the way back at 44,000 before we had that strong rejection toward the downside. We are definitely needing to see a weekly candle close above this level for actual structural confirmation. Until then, we do run a risk of rejection still. So keep your eyes on that weekly chart, keep your eyes on a daily chart, looking at the smaller levels for continuations. And of course, we do have that $24,000 level now we want to keep your eye on for a potential short. Okay, guys, I think I about summed up everything. If you've got any questions, leave them down below. I hope you guys have a fantastic day. You can check us out on the Crypto Academy courses if you're interested in learning how to trade. All the information is given here: market slides, patterns, candlesticks, technical indicators, learning how to trade, risk analysis, structure analysis, all of that. Go ahead and check it out. That being said, I'll see you guys tomorrow.